Hey YouTube, what's going on? It's Chris here. I just wanted to bring you guys an article that I was reading and I want to share it with you. If you guys could like, subscribe, all that, I appreciate it. I appreciate you being here today and I hope you're having a wonderful Saturday. So this says Timing the Crypto Market with RSI, Beginner's Guide. And we're just going to go through a few things here. It's by Sam Almit. So guys, the RSI in my opinion is one of the top 3 best indicators out there. It's one that's amazing, that just being able to see these overbought conditions and oversold conditions and kind of seeing when to get in and play a bounce, the RSI is huge for that. So this article goes on to say, sure, a technical analyst can perform just fine with an understanding of candlestick patterns, support and resistance levels, but if you could add one more weapon to your trading arsenal, wouldn't you? If you answered yes, then welcome to the world of supplemental indicators, namely the Relative Strength Index, RSI, one of the most widely used technical trading tools. The indicator is used to help identify when an asset's price is too far from its true value and hence allows a trader to take advantage before the market corrects itself. With the help of RSI, traders are more likely to get a great trade entry, which makes it an invaluable tool for trading the volatile cryptocurrency markets. And we all know how volatile the cryptocurrency markets are, guys. So when you can really see these RSI levels, like in crypto, you can see the RSI get down below 30. Even on a daily chart, we can see it get down to 20 or so. So in crypto, it's almost, as opposed to 70-30, it's like 80-20 in a way, because of how volatile the market is. But traditionally, you'll have, if it's over 70, then it is overbought. If it's under 30, it's oversold. So those are the things that you kind of want to look for, if that makes sense. And then, guys, it goes on to say, this is like the pattern, or the formula, for the RSI and how you can figure it out. So I think that's pretty interesting. And then this is what it looks like, the Relative Strength Index, and you can see how it's going up and down. And each time we get low down here around this 25 marker, 25.30, we would have a run up then, just like that. And then we'd come up here and we got to around 80 or so, and people knew that it was getting too extended, it was overbought, and then there was a pullback and almost had that double top there that weakened out right here, and then we had another big fall, and then we came back up. So I think it's just one of the strongest indicators that you can use out there. It's something you really need to add. And then it goes on to say an asset is considered undervalued or oversold and due for a corrective rally when the RSI drops below 30. So this is just going on to say the 30 and the 70, like we were just talking about. And then the overbought too, the guys, this is something that you got to realize. The RSI can help identify when an asset will cool off, if for just a brief period. So sometimes the RSI just has to cool off with a slight little pullback. And you can see these right here, how this correlates with that. Once it was up here around that 90, we had a nice pullback, and it dropped all the way down to around 35 or so. I'm just trying to look off this graph, guys. It's kind of hard to see. And then you saw the continued fall from there. So we went all the way from 90 down to 20 or so before we had the next run, and we had that V-shaped recovery. So just really pay attention to the RSI, guys. If you're not using it, it's something that's really powerful, and you can see, and you can do trend lines on it and all different types of stuff. So just really pay attention to that and see if there's anything else I want to show you here. And then it says, we'll just talk about the oversold, because that's kind of where we've been at in this cryptocurrency market. The RSI can also signal when the plummeting price may reach exhaustion by returning an oversold value. The lower the RSI goes below 30, the more oversold the asset is, and the stronger it could be for the turnaround of the prices. So keep an eye on that, guys, because remember, the bears or the bulls can't sprint at full speed forever. Like, there's not just one big fall and it just keeps falling. The bears have to catch a break, and then that's when you have that reaction, and then you'll get pushed back down again, then a reaction and back down again, and that's a bear market. So they can't just go all out. There has to be times that the RSI has to cool off. So really pay attention to that as well. Then it says the key takeaways: a quick rally to the upside tends to occur after a severe price drop known as an oversold bounce. Using the RSI to time trade entries during an oversold bounce is one of the most effective ways to make a profit on the intraday time frames. Don't wait for the RSI to reach 0 or 100. It almost never happens. Values over 85 or below 15 represent extreme overbought or oversold conditions. A divergence occurs when the RSI moves in the opposite direction of the price. A bullish divergence occurs when the RSI makes a higher low while price sets a lower low. This is generally a strong indication that a price bounce is coming. A bearish divergence occurs when the RSI sets a lower high while the price sets a higher high and suggests the buying momentum is near its climax. So guys, really do a little more studying into this. This is the RSI, the Relative Strength Index. I think it's something that you should always take a look at when you're looking at charts. And I just hope you guys are having a great day. If you could, like, subscribe, all that, I really appreciate it. And I just try to bring you videos anytime I can, guys. God bless you all.